Welcome to Trading and Review with Josip Causic. If you can download this particular app and type in the chat room number 25737. In that case, you would be able to directly interact with me. I'm going to just type in the message here. So for all of you who are present here, so we can then communicate. I'm going to check also on my phone that we are good. And we can then start rolling. Let me show you the agenda for today. So this is the agenda that I prepared for today, and it involves starting with the big picture. And this big picture is looking down from the beginning to the end, monthlies on the ETFs, and then we're going to be switching to the daily. After we have completed that, we're going to look at some sectors, four sectors specifically, and then we're going to narrow down to the individual names. So if you're good, you can give me a check mark here, and then I can simply proceed. So we have here open the four major charts, and first chart I'm going to look at is the S&P, because I like to call the S&P mother of all products. So S&P 500 had a low on the monthly back in 2020, and since then it has lifted quite significantly, and it has created a low again in October of the last year. Then it has gone even higher in November. December was a bad month, and as of now, we are kind of encapsulated within the price action of the last 2 months. That doesn't mean that's the way how it looks on a NASDAQ. So we're going to just quickly jump on the NASDAQ and look at the same thing. So again, same logic. NASDAQ is being followed by the ETF that is a QQQ. And as you can see over here, we have a low of the 2020. We have here multiple highs. One was created in October, one was created in December, and we came down pretty much to that same technical level right here at that low of the December, and we bounced with some conviction. However, we did not take out this high, and I'm going to make this high in blue so it can be more obvious. If you had taken out this high, then we could be off to the races, because as of now, overall market on the technology sector is somewhat down. And the reason why I'm saying somewhat down, because when you look at it right here, it's a clear downtrend. Let's move on to the Russell 2000 before we switch from the monthlies to the smaller time frame. Russell 2000 is followed by just see if your guys interacting with me, with the IWM. IWM also had the same low back in March of 2020. Since then, it has lifted, and it is still stuck in a similar range as the other markets, which is unable to take out the high of the December. It is this morning a bit stronger, but overall it's still stuck in a range. So having said that, just a reminder, we are following the top-down analysis, which means first we're going to look at the monthly, and then rather than going into the weekly, we're going to just skip and go straight into the daily. And when I go into the daily, I want to make sure that I'm following the same kind of three ETFs that are tracking the major market, and then we can look at that sector wise. So on a daily, you will see that we have created something here that is called in technical analysis cup and handle. And if you use your imagination, you can obviously see that this looks like a little cup here, and this would be the rim, and this part of the rim also has a handle, and this is a very strong technical pattern, because if we break the distance between this rim, and we change the color to maybe yellow, could be projected to the upside. So this kind of distance is possible to be projected to the upside if we break out of this particular pattern. Now, that doesn't mean that on the other products such as a Nasdaq and S&P, we're in the same situation. The other products, S&P and a Nasdaq, they might have a very, very different layout. So why don't we now look at on SPY, which is supposed to be the mother of all products, on a daily, and you would see how it looks like, because we have a multiple touches of the certain area that we've been struggling to break to the upside. And if we are able to break to the upside on those levels, like that would be very, very significant. So what we are doing right now, we are actually connecting this particular dot with this level right here. And if we are able to close above that, then that would be quite significant. That would be quite significant. Now, again, this is just a daily price action because 4 days ago we appeared to be going lower, and then we had this rip your face rally from the bottom to this high, and we are now attempting to even go higher, taking out again, like I'm showing that cup and handle kind of pattern. The most strongest this morning is actually Nasdaq, which is tracked by the QQQ. And if you're looking at the QQQ daily, you would see that it is just about ready to take out the high of the previous day, which is Monday. Now, again, be aware of it that we are earnings season. There's many things that are coming up. This particular week, we have a number of the technology stocks such as Microsoft, Tesla, and etc. And I'm going to touch that in a moment because I want to make sure that we go next into the sectors. So top-down analysis of the monthly and the daily is completed. We are moving into the sectors, and I want to mention 4 major sectors. So XLK, that would be technology. XLV, that would be the financials, and XLF would be healthcare, financial, technology, and maybe I'm going to even look at the communication, XLC. And then within those, we're going to go in the individual names and find some option trades. So let me pull up the different page. Could you tell us more about what happened? What really happened here is that on sector analysis, we have let me just close this. I was opening the option chain earlier today to look at some trades. We have a XLK that looks almost identical as a QQQ or as a Nasdaq. So I'm not so excited about going into this particular product and trade this morning for a simple reason that if I type in here Microsoft, which is one of the components, you will notice that the Microsoft, in fact, has earnings today after the close. Let me just open up the different windows so you will be actually able to see that. So we're going to go here on a daily, and I'm going to just type in Microsoft here. And when you see Microsoft here on daily, you would see earnings today. So I'm not too thrilled to jump into the trading of the tech stock for a simple reason that we have the earnings on that. But I do want to have an analysis of the healthcare as well as of the financials. So when we look at the healthcare right here, we would see that the healthcare is in somewhat of the downtrend. And being in the downtrend, that might represent some buying opportunity if we are about to break this downtrend to the upside, which technology has already done. So let's just double check then possibility of maybe looking at the financials rather than communication or technology, which They have already done it to the upside, so we're latecomers. So financials are the one that I want to discuss because as of now, you are seeing that if you're about to go higher, there's a lot more potential to go higher because we did not yet take out the high. So in the financial area, be aware of it that American Express does have earnings this particular week, and I want to make sure that I show you that the ticker for American Express is AXP, and you would see if you focus your eyes down here on a daily, that the earnings is right here on the 27th, which is Friday. So the next thing that I want to do is just to kind of make you aware that there are other issues that might be causing the market to move that are not directly related to the earnings. And of course, I have taken a moment here to kind of snap the earnings of the things that we should stay away from. And issues that we should stay away from is Microsoft, which is today after the close, so is Verizon. Then we have on Wednesday Tesla, AT&T, and Boeing, so we shouldn't be picking any of those stocks just before the earnings. Thursday we have American Airlines, MasterCard, Visa, and again MasterCard and Visa are in the financial sector. And then we have American Express on Friday. Now the other issues that are economic that are also very significant for us, and we should not be getting ourselves into are the announcements. So this is cut out of the FinViz. I really have reduced it only to the red flag event. So we have a PMI that is coming up today, and then we have an advanced GDP. Now be aware of it that advanced GDP comes in three parts, right? And first one is advanced, which is earliest number of it all, and it comes up, and then over here you can actually click on it and just kind of open it up and know exactly where this thing is. So let me just drag this in and show you when I go over here on, let's say, website here, Forex Factory. So I'm going to just go on a Forex Factory and pull up the calendar. So this is a calendar on a Forex Factory. In this section right here, where it says graph, let me just put a circle around it so it can be more visible. In this section right here where it says a graph, make sure that I circle that. You can click on that and you can then filter it by what specifically do you want. Now another way to filter the things is simply to click on a week that you're looking at, right? So what we need to do is we need to get to the present, not to look at the past, but to look at the present, right? So we're going to go to today's activity. So this is the flash services. We're going to move one more day into the advanced GDP. And when you look at over here, graph, this is very significant to notice here that this graph shows already two negative GDPs. So according to the statistics, we're officially considered already in a recession. This GDP that is coming up is going to be very crucial, and it could push us down back into that range that I was showing you on a monthly. So just be aware of it. These are some of the bigger issues that you should be aware of it. And that's maybe one of the reasons why the market on the FinViz, when we show all three of them, is somewhat undecided. It has gapped down. It has rallied to fill the gap. But as of now, there's not enough conviction to go higher. This then begs more search of the individual names. And one of the best ways to search the individual names is, again, to go on our platform and to pull up this particular section right here, which is groups. and within the groups to look at the different sectors and what is best looking within the sector. So when you click on it, you're getting the setup of the US market. So be aware of it. Within the US market, you can ask for a long term, and I want to disclose this. The moment you click on the long term, you will be getting a lot more of the communication in terms of the data. So we have now for every one of these a longer term and a shorter term. Like the top is 10 days. If I don't want to look at the long term, then I'm just looking at price activity of the last 10 days, right? So I will add here long term because really, as I was preparing for this, I wanted to create something that is going to be really, really clear for us. For instance, I'm going to just drag this snapshot that I did on that particular tab, that it shows both the U.S. market over the last 10 days not being certain which way it's going, right? But on financial is actually strong, and also the longer term is strong. So to prove that point, one of the ways we can do that is simply to type in XLF and see how the XLF is looking. So as you can see over here, this blue line points out to the upside, and we're ready to rip higher. Now within this tab, we have ability within the financials. And the reason why I'm keep picking the financials and not consumer goods because they are in red, we can select multiple other things. So other things that exist are the banks, then of course financial services, insurance, and all these different brokers. So if I go, for instance, here in investment services, so investment services area has individual names. And individuals name that I want to really focus on are, for instance, let's say Ameripraise. Ameripraise is also all in green. And then I'm going to also look at the ICE, which stands for the Intercontinental Exchange. So these couple of things in investment services are something that has caught my attention, and I would like to bring up to you for a search of the individual names. So Ameripraise and ICE. So when we go back to our platform here and look at these individual names, first thing that we need to look at is earnings coming up. And earning is coming up all the way in March, which means the cycle that we could trade in this particular case, it would be the cycle for a February. So if we're going to have a now stock trade plan, and I'm going to use the sticky notes right here, I want to make sure that we are aware of it, that we have earnings in the March. So here's an Ameripraise, and we're going to make sure that we put the March as our expiration. So direction. Okay, so we need to now decide the direction before we can jump into the whole procedure, how this whole thing looks, right? So on Finviz view of the same Ameripraise financials, right? We're seeing that we're poised to go higher, right? Even in this market that is completely flat. So notice over here, the market is barely up 0.0, 0.0, while the Ameripraise is actually poised to go higher. So my personal belief is that financials are leading us, doesn't matter which, either upside or to the downside. So it's a $341 product, And if we enter right now 341, we can then use the low of the day. And the low of the day today was at 34.66. I want to make sure that I show you that the 34.66. Now, we should never put our stop exactly at that 34.66. We should put a few pennies lower. So what I'm going to do right now, I'm going to type in the stop at 33.60. So if you're about to go long, so we're going long, and then we're going to build our our bullish trade on it. 6, right? And we need to now look at the target. And to look at the target, the best thing to do is simply to look at the UFOs. Where are the UFOs? So on Ameripraise, I'm going to type in here Ameripraise. The UFOs are all the way up there without our vision. So we can then proceed. One of the ways to proceed is to add a study that will show us the. Let me pull up the new chart because I want to make sure that when I open this chart that I have a clean slate. And the reason why I want to have a clean slate is simply because I will be able then to look at the option chain and all this. Let me just move this out of the way. Open up the Ameripraise. AMP is Ameripraise. And add proprietary tool is the option value map. Option value map can show the number of things, right? But be aware of it. The most important is the strikes within at the money, higher and lower. So if I have only 3, that doesn't give me enough vision. So I'm going to ask for a 7. So I'm going to have more strike prices above and below. And when I pull this up, I see the huge activity right here at 360. So going back to the whole concept here is what I want to do is I want to make sure that we have a clear target. So my target is 360, and that would be also my final target. So when you're looking at this whole thing, it's very simple. So we are here risking about the $6, and to the upside, we are aiming to make $26. That's a very good risk to reward situation. So what I'm doing next now is I'm pulling up AMC and I'm sorry, AMP. I don't know why I keep saying the wrong thing. And I'm going to the let's fire in the trade first, and then we're gonna walk through this whole explanation. So we're going for a February, and reason why we are not going for March, because in the March we're gonna have already expiration, right? So if we switch only to the volume and open interest, we are going to then look for the activity that has taken place. Let me make this also a little bit more obvious by asking for intrinsic value. So it will be clear then what is intrinsic value. These are the out of the money options right here. These are the out of the money options right here on the put side. And let me change the color here. These are the I'm gonna use blue for a call side. These are the out of the money options on call side. So 360 is the area that I would like to aim for my target. And as of now, what I don't like here is that the bid and ask spread is quite a bit wide. So what I'm going to do to kind of overcome that thing is I'm going to consider buying a debit spread that I'm going to be financing with the credit spread. And I know that's a mouthful, but I do want to actually build this up slowly. So I'm going here into AMP. That's the name of the product. Currently is sitting at the numbers have changed since I looked at the last time. 340.48. Earnings are in March. And because the earnings are in March, I'm willing to go into February here and trade the February regular monthly options. And I'm considering selling the higher strike price, which is a 370, and then buying the lower strike price, which is 360. Okay, so again, this part is what is the first part of the trade. First part of the trade, I'm purchasing this out of the money. It's called bull call spread for $2.60. So I fire it in, send it in. You're gonna hear the ding any second. So here's the ding. I got filled for 260. So I'm taking the snapshot of this to have that visible to us. So my position right here is being made of the, and we're going to look at the ice later if the ice is any better than the Ameripraise. So I have got filled for 260, but what I actually ended up having, it's out of the money bull call at $2.60 of the debit. I would like to finance that by the bull put multiple contracts that will give me that same kind of credit. Now, when you look at over here, you would see the 320. Well, we need to revisit the 320 to see if that area of the 320 would be below our UFOs. And just to make the things a little bit clearer, I'm going to remove one of these studies. I'm going to remove the option value map, and I want you to focus over here. 320 is a green unfilled UFO. That means there are waiting orders willing to purchase bullish bet at that level. So I feel comfortable doing the 320. So because I feel comfortable doing the 320, just in case I'm wrong, I'm going to protect myself with the 310. So be aware of it that I'm now selling 320 because I'm anticipating that the price is going to be about it. And this is the situation. I'm getting the credit only of the $1.90. So if I'm getting the credit of the $1.90, that's not enough to pay for my financing of the 260. So let me slow down here and make sure that I repeat this. Multiple contracts because the bull put is giving me $1.90 of the credit. Now be aware of it, that credit due to the width of the spread is going to cost me some money, right? So just be aware of it. I would need to do the multiple contracts. Specifically, I would need to have two of these bull put spread trades in order to finance it. So just be aware of it that I'm going to tick down in order to get the two, and I'm going to go for 195 to see if they're going to get filled. So I'm now looking at sending this order in which I'm selling the higher strike price and buying the lower one. And this is a matter of patience. You know, when we do this kind of trade, we really need to be patient because we are doing here now credit spread on Ameripraise. We know that earning is in March of the 2023. That's why we have picked the contract, which is a February, and we would like to see that particular trade expire worthless. Why do I say expire worthless? Because I would like to see Ameripraise any place higher than 32. So we have a higher strike price here. Let me make sure that I type in the put here. and we have a lower strike price. My higher strike price is being sold, and it's a 320. My lower strike price is being bought, and it's a 310 put. So I want to make sure that everything is clear right here. And I'm trying to get this entry for a $1.95. If they don't give me for $1, oh wow, I got actually price improvement. Take a look. It showed that I got filled for $200, right? $200. Um, I will come back to the activation rule in a moment, but I just want to make sure that if I switch this intrinsic into the position, it's going to become much more clear what is the situation here. So I have two contracts of the $10 wide spread that are financing the one contract also of the $10 spread. I know that's a mouthful, but let me just now make sure that I repeat this clearly in terms of the buying power effect. Buying power effect is at $2,000. Okay, so let's build this now by having these information set up at the document here, and then I can copy from the document that information into the platform that is going to calculate everything for us. So we go back to the platform here where we have an option chain for I'm going to just go edit the spread right away because we need to add one more leg, and the leg that I'm adding is for a call side. So for a call side, what we have done is we have bought 360 call, and we have sold 370 call. So let me make sure that this says a sell, and this is the 370. And now that we know exactly how much we did that, because 360 call was nearer to the current price, which was $5.90, then the higher one was slightly cheaper, which is $3.30. So let me just now show this so you can see it side by side. So this is where I'm getting that information in terms of the pricing of it. So when you look at right here, here's the information of the 590, and here's the information of the 330. So 590 is the 360, so that's the one, and 370 is the 330. Okay, so when I click here and update, that was our cost of the $2.60. So our bull call spread was costing us $2.60. So one more time, I'm putting it all in, and I'm telling you it's not good to be in debit. And the reason why I'm saying it's not good for us to be in debit, because what did I buy? I bought a possibility of this particular trade if it goes higher. If it goes higher 20 points, then I'm gonna earn some money. Now be aware of it that this thing could move 20 points easily. 3 days ago it was sitting at 320, and now it's at the 340. Now it's sitting at the 340. So be aware of it that we are actually ripping all the way to the upside in a 3 days 20 points. So we can definitely do that. So in case I'm wrong, I would like to be protected. And the way how I'm being protected is that I'm actually financing, as I said, this 260 debit, and I'm going to change this into red by getting two of these, and I have gotten this for $2, right? $2, because every one of these, and I did it twice. So that's mean I have gotten the $400, and even when I subtract 260 from it, I'm still ahead 140, right? So the worst possible situation, even if this thing doesn't go my way, I made 140. That's for the frustration just going through this whole thing. So just be aware of it. That this worst possible scenario. Now, this $140 I'm making on an investment that I was showing you here earlier, of the $2,000 of the buying power effect. Where did you get the $2,000 of the buying power effect? $2,000 of the buying power effect is gotten from the fact that I have not one contract, but two contracts of the bull put spread. And because I have two contracts of bull put spread, my delta is actually positive. I would like the price action to move higher. And because I would like the price action to move higher, I need to now explain the bull put side of it. Okay, so how do we do the bull put side of it? Well, the bull put side of it, we can do it by simply editing the spread and adding two option legs. So when I add two option legs, first thing that I'm going to do, I'm going to change this into puts. So I'm changing this into puts, and be aware of it. Again, one is being sold and one is being bought. The one that is being sold is a 320, and one that is being bought is a 310. Now again, I'm going to bring in the information that I have. At which prices did I get filled? 620, 420. That's easy to remember. 620 is what I had gotten, and the 420 is what I had to give back. So my filled price for the higher put was $6.20. $6.20. For the lower one was $4.20. And I need to make sure that if I do this right now properly, you understand that it's going to show the 60 cents of still being in a hole. Now again, this whole thing calculates in such a way that it says that everything is done with the one contract. But it wasn't, because as you can see over here, I have done this with the two contracts. Let me just put this in so you will kind of follow the logic over here. So as of now, everything is 111. If this was done with the 1-1, then you just need to understand $2 does not add up to 260. Therefore, that 60 cents of the debit, it's still a debit that I could lose. So what I have done, I actually have done with two contracts, and that's why you're seeing right here. And let me make sure that this is visible. Two contracts. I'm gonna take a picture of this so it pokes the eyes when this is being watched on YouTube later on, and it's clear that we are doing this with the two contracts. So these two contracts are taking care of this, and that's why I'm actually ahead by the 140 cents of the credit. Okay, how do we alter that? Well, one of the ways how we alter it is simply to go back to the edit spread and just to increase this. And then when we click OK, there it is. Now, why does it say a minus there? Well, the reason why it says a minus because it's to the market maker. It's a minus. To the broker, it's a minus. It's not a minus for us, the traders. So we have placed this particular trade with the intent of, and I'm going to spell it out, risking $2,000. Oops, I'm sorry about that. $2,000. And worst possible scenario, right, is nothing happens. Okay, Ameripraise stays flat. If the Ameripraise stays flat, meaning still at the 340, okay, so let's say time passes, it's the third Friday of the February, and Ameriprise is still at 340. Then both of my calls are, let me make this in the red, are complete waste of money. They're complete waste of money because simply they did not make me any money. But then what made me money? What made me money are these bull puts because they're expiring worthless. That's mean I keep all of those $400. But wait, you're not keeping $400, then you pay the $260. That's right. So the worst possible scenario in this case is earning $140 on a $2,000 layout of the capital. So if you want to pull up the calculator and divide those two numbers, of course we would need to subtract the commission, but in this case commission is only 65 cents. So that would be times 100, because we're calculating the percent. That's a 7% in a month. So that would give us, in worst possible scenario, 7% a month. Okay, so let's now move on to the next one. What about if, and I'm saying that's possible because market is very unpredictable. It can go up, it can go down, it can go sideways. As of now, it's doing nothing. It's just driving the future traders crazy because it had a little bit of activity in the morning, and then right after that, it just came to complete stall. It waits for more information, and as I said to you, that information is coming up this week. And one of the ways how you can do this, you click right here, US dollar, and then you uncheck this orange is a medium impact. You uncheck that, and then you just apply the filter, and there is your advanced GDP that is coming up on Thursday. Now, of course, we don't have anything tomorrow in terms of major announcements. But what is interesting, on Friday, there's going to be another major announcement, and that concerns the PCI. Now, if by any chance you don't know what any of those things mean, you can just click here and then scroll down to the sentence that says why do traders care. So Federal Reserve, primary inflation measure. Yep. So you have a Tuesday major announcement, nothing on Wednesday, Thursday major announcement, and a Friday major announcement. So it's really quite packed week to be trading. And on the top of it, I mentioned to you, here are the names that you should stay away from trading: Microsoft, Verizon, Tesla, AT&T. And then on Thursday, American Airlines, Blackstone. They have fired a bunch of people, which actually can be bullish for a stock. Now less people are going to do the more work. MasterCard, Visa, American Express. So all of these are what is this? Okay, let me just see here if we have any text here, and I want to make sure that what about the maximum profit? Okay, very good. So let's now discuss this. We have this position that I have calculated if we stay flat, but if the AMC is not flat, if the AMC rallies all the way to 370, let me just put that in. I don't know why is this now acting up to me. My bad. I should just type it in here. AMP at 370. So if the AMP is at 370, what do we have? Well, let's make this visual. And the reason why I want to make this visual is because we have a call side and we have a put side. And on the put side, we have a situation that we sold to open 320. And because we sold to open 320, we have also protected ourselves by buying to open 310. And by the way, these are the puts. if the price happens to rally to 370, and I'm going to highlight this, all of these things are going to be out of the money. All of these things are going to be out of the money. My call is going to be out of the money. I mean, not call. My 320 put is going to be out of the money, and my 310 put is going to be out of the money. But on the top side, and I'm going to insert above, we bought to open 360 call spread. And be aware of it, if you're at 370, that would be then what? $10 in the money. Well, don't you have another one? Yeah, but that one is even higher than that. So the one that we open that is even higher than that is we sold to open 370 call. And if the price is at 370, if the price is at 370 at the time, and our call is at 370, then we must admit that that particular situation would net us nothing. Nothing. But wait, you said something. Yeah, but now I'm talking about individual leg. So then what is happening? What is happening is very simple. That we have the put spread that simply dies out. And we have the two of them, right? So we're keeping here that $400, but don't forget, we actually got this for 260, right? So net, that's 140, right? So we already calculated 140. And if this is $10 in the money, right? That's a $1,000 in the money. Then we are actually ahead. Well, maybe it would be helpful to see visually how this looks like. Well, what I'm going to do right now, I'm going to simply click here on the risk graph. And when I click here on the risk graph, I need to disclose that it's going to look a little bit weird, but it is very, very clear that the most that we can make is this amount, which is $1,140. $1,140. Let me just make sure that I dump this in here so it's not confusing here. How do we get this 1,000 on the top of the 140? 140 is just given at the beginning. But this maximum profit of, and let me maybe circle that in blue, because majority of the profit came from a long call, right? Okay, majority of the profit came from this long call. Then be aware of it that this is an extraordinary rate of return. So I'm going to pull up the calculator one more time and point out to you, this is not going to be 7%. This is going to be 1,140. And I know one of you is typing right now, yeah, what about the commission? Okay, I'll show you the commission. On a $2,000 investment. And of course, because this is now percentage that we are calculating, that's 57%. 50. Now, do you need to take all 57%? Could you take it off at any given time? You could, but there would be more commissions. There would be more commission. So let me now finish up the session because we're on the top of the hour. I'm sorry about the technical issues at the first few minutes. But when you look at here at the account statement, and you see here we have a two fills, right? And you're looking when we got filled here. Cash and sweep, 2 working orders. Let me just ask for 2 days back. Okay, there it is. Okay, so these are the 2 trades that we priced. The one for 260, right? This is the one for 260. 65 cents times 2 is $1.30, right? And when you double that up, because over here we double, so that's what it is. Plus these 3 cents and the 4 cents. So this is the trade. It's done in a paper. Everything that was done was for educational purposes only. And I'm looking right here. There's no questions anymore, and I'm gonna end the session. So thank you one more time for attending this session, and we are ending it right now. So stay hedged and have a good day. Bye now.